Hey everybody, this is Jose Blasco. This is a sound check. We are about to start the session. It would be good if you could just reply with a quick message on the chat box, as we always do, so I know that you guys hear me well and all is ready to get started. I believe that's the case, but again, always looking for that important confirmation, guys. So please give me a quick hello. How are you, Mario? How are you, Maka? Good to see you guys. It seems always good. We got 25 seconds to go. So we are almost there. Almost there, everybody. Cool. 10 seconds to go. I will turn on my video stream so I can say hi from the bottom right side of the corner and on the screen. How are you, everybody? I'm just noticing my big Darth Vader here on my chest. I'm not sure if this is too intimidating or it's okay. Anyway, here we go. So we just hit the top of the hour. It's time to get started. So welcome to the session, everybody. Today is September 8, 2021. My name is Jose Blasco. I will be leading the session. This is Options with Options. I am highlighting the disclaimer on the upper left side of the screen. Please read it carefully. This is important information. We always say that because it is. Trading indeed carries risk, and therefore we need to have things under control, and therefore the disclaimer is there to highlight those important aspects of trading and risk. How are you, Siderman? Good to see you, my friend. Thank you very much, Mario. I was not sure if Darth would basically show up or not from the bottom part because sometimes I'm not fully aware of where the camera cuts. But anyway, so the plan for today, everybody, we're gonna be looking at the market environment. We're gonna be reviewing trades that we have running at the moment. You have seen, I guess, what happens to First Solar today, isn't it? If not, we're going to see it together. And then trade execution, we'll be looking at new trading opportunities. Okay. Tim, very good to see you, my friend. Clive, very nice to have you with us as well. Okay. So let's begin with the analysis. This is the S&P 500 ETF. As always, we're going to start looking at the climate. As you can see, the climate is blue and thick, is confirmed. But as you can see, we got the number 0 on the current stage of the climate, because the climate is being challenged as we speak and may turn from blue to red. We'll see that tomorrow when we are back in the session. We'll have confirmation of that. Indeed, the last time that we were together in the room was last Thursday, which I'm not mistaken was September 9, and I had a lot of cautionary kind of comments when it comes to the market potentially turning down from there. Again, it's not like in trading is about being proud of being right. It's not the case at all. We rely on probabilities, and that the probabilities were suggesting that to be the case. Therefore, if you recall, we entered a hedging trade with ADM, which we're going to be monitoring in a moment and see what's happening to those trades, because we are now ready, potentially entering a down climate, which again, not a big deal based on statistics, is supposed to last for 2 candles. So today a couple more candles, and that would be, the market would be back to start moving higher. Again, based on statistics, we will be assessing that again tomorrow. And again, not a big deal, but indeed useful to have that little hedge to offset the problematic impact of the market falling down for a few days if you are mostly long stocks. Okay. So we'll talk about that. In any case, when looking at the S&P, when we look at the 55-minute time frame, so now we have a red UFO that was not available before, and now it is. Okay, and the most important thing is that the further UFO that we have down is located quite far down. So from 450 to 447, you got $3 of additional drop that could happen relatively easily because there is nothing to stop it. There is no buy orders in the market at this moment in time, and therefore this market has open path to continue falling for a bit more, which is what the statistics suggest. Now, when looking at implied volatility of the calls and the puts, as you can see, the divergence it's major now. Okay, we have a big divergence between the call and the put. 13% implied volatility for the put side, 10% implied volatility for the call side. So that indeed shows a pretty powerful bias to the downside, even though again, it's not like this is too scary. because you can see it's 2.5 times more puts than calls traded today, 1.2 times more puts than calls traded on the next expiration date, which is September 15. But then on the next one, which is September 17, we got more calls than puts. Okay, so again, the market does not expect this to be the end of the world. It's just a normal kind of um, movement going through cycles, a bit more pronounced than other cases, because you can see when we hit those red dots there, here, or here, the difference between the implied volatility for the calls and the puts was not as exaggerated as it was here. So, what tends to happen when the difference is also major, okay, is that now you have a non-sustainable situation, and then you may have a very strong turning point. Okay, so we'll see. We'll be assessing all those market conditions. So far, what was expected is happening. It's not a big deal. It's looking like a normal, switch from a blue climate to a red climate to go back to a blue climate. Okay, nothing that major, but yeah, that's a little bit of a summary of what we have in our hands right now. Let's see the comments there on the chat box. Joanne, how are you? It's very good to see you, Joanne. Siderman, I must have missed it. What are the settings for the UFO on top? In my settings, if I go to edit study and I look at the UFOs, so my settings are 61.8, and that's what I have. Okay, so now Siderman, I believe that you are utilizing top for TradeStation. So the data feed, it's different than mine, because I am utilizing TradeStation for QC. Should not be a major difference, but from time to time you may have a UFO I don't have, or vice versa, even if we have the same settings. Okay, and that's because the data vendor, the market data provider, so provides different data, and of course the plotting and the market analysis performed by top, it's data dependent, and therefore depending on the data, so we have a little bit of changes. Okay. Nice to hear, Joanne, that all is great. Fantastic. So let's continue. So then we're going to look at the VIX, okay? And when looking at the VIX, so we can see, okay, or we are about to be able to see, okay, this is loading a bit slow. I guess my internet connection is not working as normal. This is way too slow. Should not be like that. Really should not be like that at all. Okay, so if I load Apple, it seems that things are popping up more efficiently, but if I load the VIX, it's not the case. So again, we're gonna have to be just a little patient here, guys. This is not super ideal, but it's what it is. So in the meantime, while I'm waiting for this to load, I guess a little bit of an internet glitch, I guess. And now it's loading. Okay, we got it. So we are talking about a VIX of 18.87. So obviously with the drop in the market, VIX went from 16 to close to 19, or a little bit surpassed 19 earlier in the day. So again, that's nice. Okay, it's nice, especially for the trades where we are trading spreads. It's gonna give a little bit of an extra boost of profitability, the fact that the implied volatility is rising across the board. So that's nice to see. But again, it's not like 18 volatility is huge, massive. So again, today, depending on the review of the positions that we have, I will decide if I want to start planning on more directional trades or maybe not. Maybe I'm going to be planning on non-directional trades. We'll talk about that later on. I would like to continue working on non-directional trades because from an educational point of view, I believe it's going to be more useful to you guys from a coaching point of view. But at the same time, we also need to, treat those accounts with the greatest care as possible, right? So in this sense, I need to look at those positions before I decide what to do today, okay? Because the VIX is kind of like in the middle of nowhere. There is no red UFO, so anything could happen, really. Okay, so with all of this said, okay, we now know what's going on in the market. So if we look at our positions, and I bring this to the midpoint just to have it similar to what we may see in Thinkorswim. So you can see how our first solar trade, it's currently providing a P&L of $111. So if I look at TOS, it shows 108. It's about the same. Well, anyone was watching First Solar earlier in the day? Anyone is in this trade by any chance? Because we should be out of this trade, okay? And I didn't close it because I wanted to discuss it with you guys. But First Solar has been moving very, very, very fast. Okay, so if you haven't seen it, let me show you. Okay, let me show you First Solar, how First Solar went all the way to our target of 102. Okay, so the high of the day for First Solar was 102.09. So actually our target was hit. Okay, and from there it started dropping like quite intensively, as you can see. Okay, so you should be out of this trade. That's the first thing, right? And the P&L of this trade earlier in the day, as I was looking at it, was about $500 per contract, something like that. Now, because it's dropped so much, okay, from 102 it went down to 96. So now that P&L is down again to 123.5, but it was about $500 a bit earlier today. You were filled, Siderman, so you are out of this trade and you collected. If you don't mind to share how much you collected, what is the net profit of this trade? Okay, it would be nice to know if you were watching it and you were able to collect this full profit. Okay. In any case, again, it's a bad thing, if you wish, from a trader point of view, that I didn't close it. At the same time, I left it open on purpose so we can close it together, but then the market dropped so fast, so I didn't have time to close it. So then I thought, you know what? In trading, this may happen to you. So I would actually want to look at it from that point of view. It's like, let's say today something happened, your computer was not booting, something happened to your internet. Next thing you know, when you connect, you see yourself that, yes, you hit the target already, but then now it's down to 126. So what should you do? What can you do to try to alleviate this problem? Okay, so we're going to look at it from that angle, because this is also something that happens in the real world of traders, isn't it? You made 233. Oh, wow, that looks very little, Siderman, for what I saw earlier in the day. I saw P&Ls of close to 500. Did you close it when you hit the target at 102, or it started falling down and you closed it later on? Okay, I mean, still a good job. Okay, and certainly I want to congratulate you for this good practice. But I'm indeed curious to know, what was your exit price on the stock chart, not on the options prices, but on the stock chart, because I saw that P&L much, much higher than that. So I'm curious to know, if you don't mind, Siderman. So anyway, great. So we hit the target and it went down. So now what? Okay, so again, the way we're going to process this trade is, as always, right click, okay, and we're going to open a risk graph so we can analyze better what is it that we got on our hands, okay, as well as what can we do with it. Okay, what can we do with it? And I like very much to go ahead and click the crosshairs in the data window. So then when I move inside my risk graph, I get to have some values here that are very useful for my analysis. So if I move to where we are now, okay, so the P&L, it's 126. Okay. By the way, if you recall, when we projected our target date, the projected date was to be September 6th, and in the end we reached target September 8th. Okay, so you can see as well, you got filled and you made 723. So that was your field price, or that was your net P&L? Okay, was it your net P&L or the field price when you got out? Again, curious to know, Siderman. Thank you for checking. So again, pretty good estimation for the target location, as you can see with the tools, and therefore it's very helpful for traders, right? So now, so what if instead of closing the trade here, you close the trade at 102? So 102 is more or less here, and as you can see, the P&L, the estimated P&L would be 493. Okay, so that should be the net result of the trade, if I had closed it on time. Okay, but again, I didn't. Okay, so again, one more time, let's pretend now you come home, you turn on your computer, whatever that is, and now you're like, oh, the target was hit, but then it moved aggressively on the opposite direction. What do I do now? Okay, well, what do you do now? So one option is just close it. Okay, and kind of like, hope you don't mind me to say, take the blame. Okay, because to be honest, if you were not in front of the computer to close it, so there is a part of responsibility which is ours, right? So take the blame, close the trade. You made less profit, but still you are disciplined with your plan, because you missed your exit rule, but you are disciplined with whatever you were going to do. So that's one approach. But then options give you options, isn't it? So what else can we do? Well, another thing we can do is the following. Okay, so I'm gonna compare spreads. Okay, and I'm going to copy the primary spread. I'm going to leave it alone the way it is. Okay, and what I'm going to do is I'm going to take the second spread, and what I'm going to do is I'm going to explore what happens if I convert this trade into a long butterfly. Okay, so this is the same thing that we discussed in prior sessions, but because the stock today is much higher, it's currently trading at 96.15, so we may have an opportunity to do better than what was possible before. Also, we got more time decay. Again, the stock has dropped a lot, so I'm not sure it's going to be that amazing, but let's try. Okay, so what I'm going to do first is I'm going to go ahead and assess what happens if I buy, okay, the 115 call that I have. Okay, so what if I buy it? Okay, so in other words, I am long the 92.5 and short the 115 call, right? So if I close, meaning I selected buy that 115 call, and I selected midpoint, meaning is now, right? Because when I got filled a couple of weeks ago, it was 91 cents. So then, what would happen if I do that, right? So if I do that, so that's first step into my analysis. So you're gonna get paid 41 cents for that 115 call, and this basically locks in that difference in the process, but it doesn't do much more for you, right? Because now the blue trade on the top, which is the one we currently have, is giving you a risk of 489, where the orange trade is giving you a risk of 580. Okay, well, yeah, indeed, you collect a $50 risk, so your net risk is 580 minus 50, which is 530, which is more than 489. So just closing the short call is not good enough. Okay, it's not good enough. So for an earlier trade on first dollars, I was done for the first number since the beginning. I made something on first dollar on this trade that close to that. Wonderful, Siderman. Thank you for confirming. Great job, and I guess you got a much better entry price than me in this case. So that's it's good to see. So now, what else can I do? Okay, so the next thing I could do is to be like, okay, so if I get rid of the 115 call, what else can I do? Well, again, in the process of converting this trade into a long butterfly, so what we could do is we could sell 2 calls, which I need to determine what strike, and then I could buy 1 call above, which I also need to determine which price. Okay, so let me be visual on the screen because I'm probably confusing a little bit with adding so many rows. So a long butterfly is made of a call above, 2 short calls in the middle, and 1 call below. That's a long butterfly, where the one below is our 92.5 call. Okay, and then this one we need to decide what strike, and that one is going to be equal distance from 92 to whatever, okay, to the upper strike. Okay, so how can I lock in the greatest quantity of profit as possible? Well, I could lock in the greatest quantity of profit as possible by going to whatever strike which is the nearest to the current price, okay, which is 96, maybe 95. I got 95 and 97 and a half. I don't have 96. So I'm going to try with 95. So if I sell 2 of the 95 and then I buy the 97 and a half, because the distance between 92 and a half and 95 is 2.5, and therefore the distance between 97 and a half and 95 is also 2.5. So if I do that, now I converted my debit spread into a long butterfly. And what would that do to me? Let's try. So if we do this, okay, now this trade, would create a credit of $100, okay, meaning that no matter what, you make 100. Okay, that would be the result of the trade. You can see it's here in orange. No matter if it goes up or down, it's 100. Okay, but now if you end up in that magic place, which is 95, okay, so and that was to happen all the way on the expiration date, so now you could make all the way to $345. So the question is, should we go ahead, close this trade, collect 117, and we are done? Or should we put ourselves in a position where, okay, we missed the target, okay, that was way better profit, but we missed it. So should we just take it and run? Or should we convert this into a position where, worst case, we're going to make 100, kind of? Okay, now it's 90. Okay, so we're going to make 90. Okay, or should we go ahead and position ourselves to make this maximum profit here of 342. Okay, so what should we do? And to be honest, I'm not a super fan of what we end up with, because the likelihood of ending up exactly at 95, which is below current price, given the fact that First Solar belongs to a strong sector, has an up climate that was in an early stage, and on the daily time frame is an up climate as well, that is just starting. So the likelihood for that stock to go, to trade closer to 95 than to trade higher than 95, it's quite low. Okay, so in this case, I'm afraid that you may go ahead and be like, okay, so we're just gonna close it, and that's it. Okay, because this is not providing such a significant advantage. Now, some of you may be like, okay, you know what? I'm just gonna do it. I'm just gonna do it because I want to expose myself to maybe I make 345. Great, but again, you're gonna wait until October 15 all the way, and just keep all of that in mind. So in my mind, it's not worth it, and therefore I'm just gonna get rid of it. I'm gonna close this trade, collect those $100+, and that's it. Okay. Questions before I do it, guys? Please go ahead on the chat box. No matter if you are in the open stream, such as the YouTube channel, or you are in the private room, go ahead and type your questions or comments. Did I confuse you? Did I go too fast? Do you need me to re-explain it? Please let me know. There is one last attempt I could try, which I'm relatively positive is not going to work, but let's try, which is instead of doing a 95, which is the current strike to the current price, 95.95, maybe if I try just a little higher, then I get a little bit of a positive bias, right? So if I do 97.5 and then I do, I don't have 102.5, so we need to do 105. So that's going to be it's not going to be a balanced risk profile, which is fine. But now it gets into the negative territory here. Okay, so yeah. So now the problem is that I get into the negative territory because the 105 it's further away than the 102.5. There is no 102.5. So if I do 100, the problem now is that instead of a $67 credit, it may be a small debit. Yeah, it's $63 of debit. So now you can make more, right, on the upper side, but now you have risk below because it's a debit. Okay, so again, the best solution was using the 95 strike, but I don't see it as good enough to go for it. I basically prefer and suggest to go ahead and close the trade. Okay. Well, Joan, this is indeed another choice. You can hold on to it, okay, and and hopefully it goes back up. But I would not suggest to do that. I mean, on one hand, as I said, this stock belongs to a strong sector. The climate is blue, so it has huge odds for it to go back up and so on. But remember, those speed bumps are a tool that we use to identify what potentially could be significant turning points. So in other words, from there, it may go back up, it may tease a bit, it may go back up, may tease a bit, and at some point, it starts going into some sort of a more severe downtrend. This is what you see all the time with those turning points, or most of the time. So if I pick here, I'm not sure in this case what's going to be, but in this case, it's the same area. If you had picked here, okay, so you can see that one, it was a pretty significant drop. And then when it came back up, it went a little further. So you would have a second chance to get to your target. But again, the way I think of those speed bump tools is to, catch those very significant turning points. Because let's face it, if I thought the stock was going to go much higher than that, so then, why don't I set a target which is higher than that, right? So the reason why 102 was my hard get out, it's because of the speed bump is there, okay? So again, in this case, I'm, as a trader, I'm willing to take the blame and be like, okay, I was not there on time to close it, so I'll take the blame. That's it. It's just like, if you operate a business and you fell asleep that day, and when it was time to open your store, you were not in time and you missed a bunch of clients that, early morning buys whatever product from your store. So, you take the blame, right? So it's kind of like what I would do in my trading based on my personality. At the same time, from a trading point of view, for sure, Joanne, you make sense. And while the speed bump is there to potentially generate a turning point, you may see price come back here a little bit and test that trading area a few times before it turns. Like for example, when you look at here, what happens is that it went in here, it went down, it went in here, it went down, it went in here, and finally it went down. So this is the first kiss, right? So in this sense, there may be more kisses to that speed bump, and you may end up reaching your target. So certainly, your point makes sense, Joanne. If I was to execute your approach, I would just be a bit careful, and therefore, instead of 102 as a target, I would set my target to be 125, which is the beginning part of this area, instead of the second part of the area, which is where I had set my target. Okay. So again, the bottom part is the conservative target. The second part is the, let's say the preferred target, and the latest part is the slightly hopeful target. Okay. Which I never take those. Okay, but the one in the middle is the one I normally go for. Cool. Okay, so let's close First Solar. And in order to close First Solar, I'm just gonna select those two guys, right click to create a closing order to sell the vertical. Okay, and the midpoint is 612. So let's attempt to get 612, and we'll see what happens. Okay, let's see if I get filled later, and if not, I'll try to tweak it a little bit. I'll try to tweak it to make sure I get filled. So then in the following sessions, we are in sync with whatever you have in your account and whatever I am using on my end. Okay. Bombs. Yes. I was going to have a very bad joke. Well, let's have it. Bombs in the UK also means a different thing, which is basically where you sit, isn't it? Where you sit on. Anyway, very bad joke, as I warned you. Anyway, let's get back to the charts. Okay, and the next position that we have to review is Intel. This one is going to be a short review. So when we look at Intel, so Intel was a trade that we executed because of this speed bump lining up with the UFO. So we got into this trade. All of this move allowed us to reduce the risk of this trade. Remember, we are now left with a call after we started with a call and two bull put spreads. Okay, so we closed the bull put spreads, and now we are left with a call, but now the net cost of that call is $9. So the most we can lose in this trade is $9, which is tiny, 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 right? And if Intel keeps going and reaches our target, sorry, I clicked on the wrong place, which our target is 57.90, that red UFO. So we're going to be in a very, very nice position. Okay. Now, talking about targets, I want to modify the target. Why? Because notice how a new significant turning point has happened that was not there before. That guy. So let's project. Okay. And now notice that if price surpasses this high, there is a little bit of a warning sign here when it comes to this being now our target, 55.63. There is no red UFO, and indeed it could continue going higher, but we also know what happened with the speed bumps, isn't it? They are quite powerful when it comes to identifying what potentially could be a turning point. Of course, when you have the speed bump and the UFO together, this is when really the odds are very great. But still, when it comes to taking profits, it is indeed a good thing to take it easy, to be a bit on the conservative side. It's a bit sad to hit a target and just because of greed, you never got out, and then it turns all the way against, right? So what can we do, right? What can we do? Well, when the target was all the way to 58, we cannot do too much to this call. Okay, we could not do too much to this call. So I'm just gonna bring the call to the risk profile. So we could not do too much to that long call because we were shooting for a target that is above that, but now the target is below the call we own. Okay, now the target is below the call we own, which is giving us an opportunity to potentially convert this trade into a credit trade, and therefore basically eliminate any potential for loss for this trade on Intel. Okay, so let's explore this possibility. We're gonna do it again by comparing spread. Okay, we're gonna do it again by comparing spread, and basically what we're gonna do is so copy the primary spread, and what we're gonna do is to that 57.5 call. Okay, what we're gonna do is that we're gonna sell a call below. Okay, why below? Because our target is below. Our target is around 55 something, The next strike below is 55. There is nothing else to choose from. So what happens if I sell the 55? What's going to happen to this trade? Because of course the whole risk profile is going to change, and we may accept it or we may reject it. Okay. So if I click OK, okay, now we end up with a trade. Well, it's not going to be accepted. Okay, we will not accept it because the 55 call is basically paying. Oh, okay, that's not possible. I'm like, how can that be? I forgot to change fill price to midpoint. I'm like, this is really not possible. So I'm gonna click OK now. Okay, so selling the 55 call. Okay, okay. And now let's see. Oh, okay, so that's a different story now. So now we can see how this trade creates $69 of credit. Okay, so now as long as you stay below the break-even point, which the break-even point is 55.69, as you can see, as long as you stay below right there 55.69, so you would profit $69. But the credit is not substantial enough in a way where now you open up for a risk of 181, which is if Intel was to gap up and just keep going and going and going, next thing you know, notice how, above that price you start losing money and you can lose up to 181. Okay, so therefore it's not the right action to be taken. Okay, and therefore we're gonna pass on Intel and we're just gonna leave it alone. It's a $9 risk trade and we are betting on Intel to push higher, so we'll wait for that to happen. And the one thing though is that based on what we saw on the chart, we are now changing our target to be a nearer target located here at 55.58. Okay, so we'll need to see what happens at the time, because again, if it takes a long time to get there, time decay may really hurt our 57.5 call, and then we may need to do certain adjustments to end up with a better profit, because again, this is an out of the money call, and while it's very cheap, if the stock moves, it's not going to pay us too much unless the stock moves enough and soon enough, because it's out of the money. So we're going to have to assess that, wait for price to rally to the speed bump, and when it gets there, assess what we got in our account and do a tweak, or close the trade. If it's profitable, just close it, because that would be your target and you're out. And if not, just reconvert the trade into something else that could lock in that profit without increasing the risk. So I will be leading you into that in future sessions. At the moment, we need to wait, and you will very likely get to see Intel to come here and say hello to the UFO, and from there, start again its move to the upside. Okay, so stocks, as we know, they don't move, in one straight line. Okay. Let me see your comments. Here. So that must be done at the same time as we open the trade. Oh, wait a minute. I missed so much from you guys. Sorry for that. Okay, yeah. So Maka, so what was the best strategy for this trade? Was it possible to have a closing order at the target price if we didn't watch the market open? Yes, of course it was possible to have that, and that's what we should have done. I like to treat the trades very manually in the sessions with you guys, because it serves me better to explain things. But yeah, anyway, you know what? Maybe this is actually a good time as well to share something I'm gonna do starting in October. So in October, I'm gonna start running some sessions over the weekend to go deeper into the use of top. Okay, just we'll be talking about top, and of course we cannot talk about top without talking about options. So it's gonna be a little bit of a mix, but it's gonna be a bit educational with options, and very hands-on with the platform, so you guys can master it. And because the market is closed, we won't be executing trades, but we'll be talking about all the functionality, including order placement, and I plan to talk about TOS and things like that as well, not only top. Okay, so I'll be running multiple sessions in the month of October, so keep an eye on the calendar when we post it, which is going to be, that's a couple of weeks from now. And that way you will have the dates, and of course if you cannot attend, it's going to be recorded. Okay, in the meantime, many of you are using top already, so if you have questions, feel free to ask me in the session, and I'm happy to start giving you answers so you know how to use the platform better. I need to answer a question from Joe today, actually. So Joe, if you are with us in a moment, I'll talk about those tabs in the bottom part of the screen. So I'll talk about that before we're done. But everyone, feel free to ask questions, okay, while we are waiting for those sessions starting in October, okay? Uh, yes. So you have to build those conditional orders. That's how it's called, Maca. And I will be explaining how to do that, okay? Yeah. Yeah. Siderman, a closing market order to execute. Um, Not ideal to close with a market order, okay, Siderman, because if this happens right at the open, I mean, you were a bit lucky there with First Solar that while the move was significant, the market opened more or less where it gapped up, but it gapped up to the opening price was 98. Okay, so it gapped up at 98 and then rallied all the way to 102. So when it got to 102, you already got some liquidity kicking in, and then your market order was decent. But if that happens right at the open, you're gonna get killed on slippage. And I had cases when I was learning options like years and years ago where I would reach my target, get filled at the open with a gap, and lose money, even though I was right and I hit my target all the way, wherever my target was. Okay. So market orders, it's a big no-no. Okay. So we'll talk about order placement and how you can do better than market orders. Okay. Cool. Yes, Maka. It's a good practice to have your closing orders at the same time, assuming they have rules for that. Yeah, you can set it anytime, as John said, but yeah, good idea to do it. You open the trade, you get filled, and then you place your closing order, and that's it. Yeah, yeah. Okay, good, wonderful. Oh, Joe, and I see you're here. Wonderful, my friend. Limit order with a condition. Wonderful. Way to do it, Mark. Way to do it. Fantastic. Great. So much to do, isn't it, guys? Options give you options. It's so true, right? Anyway, okay. So the next one in line is ADM. Okay, so ADM is the stock that we have in our portfolio that we entered as a hedge the other day. It's currently paying $33. It was paying $45 earlier when I saw it. By the way, I have not been filled on First Solar, so let me just kill it. Please don't do that, okay? I'm using a market order because this is a simulated account. Don't do it with a live account. With a live account, just negotiate your spread properly, okay? Don't do it with market. I'm just doing it so it gets filled, and that's it. That's it. So I just got filled, so I'm out of the trade, and that's it. End of the story. Now, ADM. So ADM is a bear put spread. We're buying the 60 and the 55, right? And this trade is now paying $33 as the stock is falling. Now, when looking at the chart, okay, that trade has a target of 57.68, which is not so far, is $1 lower. So you may reach there today or tomorrow. So it could be really any time. But again, the issue, okay, again, this is the kind of like when you need to always remember why you do the things you do. So we enter this trade as a hedge, right? So in one hand, I'm delighted if I'm going to reach my target, but on the other hand, I'm skeptical. I may not reach my target. Why? Because if the S&P keeps going higher, the whole thing is going to go higher, and I won't reach my target with a hedge. So if I am always ready to act on my targets when I am long, or short, when I am hedging, meaning it's not a main position in my account, it's a hedging trade, I am even more eager or more ready to act on the management of the trade to make sure that if I don't reach my target, at least I collected as much as possible from the hedge. Okay, so what can we do here? Well, to be honest, what we can do here is very similar to the approach with First Solar, but backwards, because with First Solar it was long with calls and this is short with puts. Okay, so let's go ahead and take a look. We're going to look at the risk graph. Okay, looking at the risk graph here. We have this particular trade, so we're going to compare it. Okay, we're going to copy the primary spread. And what I'm going to do, okay, is I'm going to assess what if I convert this trade in a put butterfly. Okay, a put butterfly. What would happen to this trade if I make it a put butterfly? So one choice would be to add one leg, okay, to buy the 60 put at the current price. So if I do that, that 60 put, sorry, not 60 put, 55 put. Okay, 55 put, here we go. So if I do that, so that 55 put that I am now buying would get rid of the 55 put I was selling. Okay, but at the same time, the further away you go, right? So I can close the 55 and maybe sell 2 of the 50s, right? So again, just like we did before, we said long butterfly is made of buy a call, sell 2 calls, and buy a call, right? So if we do a put butterfly, so then it's buy a put, sell 2 puts, and buy a put. It's the same thing, right? So now the one here above, it's the 60 put I own. Okay, the one in the middle is the 55 put I own. So I can go ahead and close the 55 and maybe go ahead and sell 2 of the 50 puts. And because from 60 to 50 is $10, then I can buy the 40 put below, which is $10 away as well. So I got $10, $10. So I could do that. But again, while I'm directional on ADM to the short side, it's a hedge. So it's not like I'm planning to hit the furthest away target in the world, right? So in this case, instead of going the route of closing the 55 and selling other strikes, okay, I'm not going to do that. What I'm going to do is I'm going to sell another 55, okay, and I'm going to buy the 50. So, yes, the 50. Okay, buy, not sell. Okay, so in other words, if I do this, if you look at this carefully, what I had, which is where it says field price, right? So what I had is I got the 60 put and I got the 55 put. So now what I'm doing is I'm selling another one. So I'm going to have 2 of the 55 put short. And then I'm buying a 50 put below. Okay, so I got the 60, 55, 50 put, which is entered in 2 steps. So if I do that, what's going to happen? And please, guys, give me some confirmation there that you're with me on what I'm trying to do. Again, when you assess it, you will then know, only then you will know if the trade makes sense or it doesn't. But let's go ahead and take a look. So I'm going to click OK. And if we do that, so this trade, it's not that convenient. It's not that convenient. So by doing that, we managed to reduce the risk from 137 to 114. Okay, from 137 to 114. So it's good. There is a little bit of a reduction of risk. The P&L, if you think about how steep this is, it's about the same. So the efficiency of the trade, it's pretty okay. I'm okay with that. But to be honest, we're reducing very little the amount of risk. Okay, so it's not really that impressive. Okay, so then I'm gonna propose to do nothing. Okay, I'm gonna propose to do nothing and just continue riding the move of the stock. Well, actually, we are gonna do something because we just closed for Solar, and now we have 1 long with Intel and 1 short with ADM. I urgently need to get into a long trade. And that's going to be how I offset the case if ADM goes against me. I'm going to do it by finding a good long trade. Okay, so that's what I'm going to do. So I'm not going to act on ADM, but indeed I need to act on my portfolio. Okay. Yes, Maka, I will also cover order placement in October. Indeed. Thank you, Mario, for confirming it makes sense. So nothing to be done with ADM. We leave it alone. Okay, we leave it alone, and we're gonna be working on the other trade. By the way, one more thing I wanted to show you guys is look, this is the S&P. The S&P has moved down by 0.41% today. Okay, this is ADM. And ADM has moved down by 1.21% today. This is First Solar, and First Solar has moved at this moment in time by 1.6% higher than the market today. So what do you notice? What do you notice about First Solar versus the S&P and ADM versus the S&P? What do you notice? You guys tell me. I'll take a sip of water if you don't mind. So waiting for your response, my friends. I know there is always a little bit of video lag. Exactly. Strong sector and weak vector, strong sector uh, and weak sector, isn't it? So this is the power of the grouping. Okay, that is why when we hedge or when we enter trades, we make sure they belong to groups that are either strong or weak. Okay, I mean it's not always going to be like that, but more often than not, you will benefit from that relative strength or weakness, as Tim said perfectly, when it comes to the market. Okay. So yeah, nice. Anyway, so Joe's question, very quick. So Joe sent me an email and he said, Jose, you have tabs there in the bottom part of the screen. How do you do that? Okay. Well, it's very simple. There's a plus sign. So the moment you click plus, it creates a new tab. Okay. And there you can do whatever you want. Okay. Now, notice how the charts that are created when you click on the plus sign are created based on whatever template you have as a default for your charts. Okay. So let's say that I'm going to close it. Okay. It's there. I'm going to close it. So let's say I take any of my templates, for example, this, okay, which is a, well, this is a 3-day chart. Okay. It doesn't matter what it is. The point is that my template is a chart with a white background, blah, blah, blah. So if I take this and that formatting, I save it as default, right? And then you click on the plus sign. So now a new chart is open, but guess what? That chart is open not with the black background. That chart is now open with a white background with the UFOs, just like the one I had before that I created or saved as a default. So you can save your charts as either defaults, or you can save them with a specific name. And maybe you have, the type of template you like to use when it's an intraday trade, or the type of template you like to use when it's whatever trade. And you just create a set of templates, and then you just click on the plus sign and change the template, and that's it. Your charts are what you want. Okay. Then to move between the tabs, you just click on them. Even though there is a bug in the platform, which I remember I mentioned one, and we'll fix it one of these days. But the bug is the fact that sometimes you click on the tabs and the tabs slide. You see my 8-minute time frame, which is always on the left, was moved all the way to the right. So that's a little tiny thing. It's silly. At the same time, we do need to put some time and development to fix it, which we are into. And then when it's fixed, tab will auto update for you guys, and that's it. But in the meantime, if you want to avoid the auto sliding of the tabs, okay, you just use the keyboard. I am a keyboard guy. I love keyboards. I love to move my hand away from the. I hate to move my hand away from the keyboard to do something with a mouse. I love to do everything on the keyboard, and therefore I love hotkeys and everything else. So Control page up moves you up through the tabs, and Control page down moves you down through the tabs. So that way you can be very fast on, looking at different time frames, things like that. Okay. And also if, let's say, during the day, there is a time during the day that maybe you go for lunch, whatever, and now you're in observation mode. So know that there is an auto repeat, okay, auto rotate, I should say, for the tabs here on the bottom right. You can select how many seconds, default is 3 seconds. And when you click rotate every 3 seconds, even if you don't touch it, it's going to change from one tab to another. So you can be monitoring multiple stocks you may have. You can be monitoring whatever you want easily. Maybe you're on the go. You only have one computer screen. Is your laptop, things like that. This could be useful to you. Okay. So Joe, this is my little explanation for you when it comes to tabs. A little, additional conversation today, not related to options, but indeed, something that is needed for me to explain so you guys can enjoy the full potential of the platform. Okay. Can we put different pages on multiple monitors? Absolutely. You just need to float. Okay. Again, your question, Joe, comes because you are used to TradeStation, which TradeStation is a software which uses two concepts, which is desktops and workspaces. So you are used to that, and therefore you think in terms of workspaces and desktops. Therefore, to you, each monitor is a desktop. And you are wondering, can I open multiple pages and have them in different monitors? And the answer is that a page is multi-monitor by definition. You don't need multiple pages. A page is, you may have 10 monitors and charts in those 10 monitors. That's one page. Okay, a page is a multi-monitor thing, not a one monitor thing. So how do you get your tools, whatever tool, to another monitor? So you just open whatever tool, could be a chart, could be an chain. All those applications got the float window, the float button, right? So you click on float. Okay, this now is detached. Okay, and you can bring it to another computer screen, leave it there, organize it there. Then you close the platform, right? Everything saves, right? Even if you don't save, everything saves. You remember that? I explained it before, right? And when you reopen the platform, everything will be in its place. So if you left 5 windows in a monitor on the left, if you have 10 monitors and each monitor got different windows, and you close the platform, when you reopen the platform, everything will be in its place. Okay? And you can always bring it back if you want, manually like that, or even without manually. You just click on the dock button, right? Because every time you float something, right? If I click float, the float button becomes dock, right? So if I have it on the other monitor and I click dock, 1, 2, 3, here we go. The option chain is back here inside the main application window. Okay, but remember, the page is not that. This is the main application window. The page is multi-monitor. So the platform is, it's, if you wish, way more intuitive. It's more like how a Mac computer will work, if you wish. I'm not sure it's the best analogy. It's more intuitive, but at the same time, many of us are coming from the world of TradeStation, and we have a way on how to think, which is a bit more restrictive. Okay, so open your mind to floating and docking your windows. And as you get used to it, you're gonna love it so much, you'll see. Anyway, so let's continue, guys. So time to start planning for trades. We're 10 minutes left. Okay, so we need a long trade urgently. So I'm gonna look at my matrix. Okay, I'm gonna try to find a long trade at the speed of the light. And we talked a lot about trade management today, which I won't do tomorrow, and therefore tomorrow we'll have more time for planning. Like it happens most of the Wednesdays and Thursdays, isn't it? Where normally Wednesdays are more about trade management and the Thursdays more about planning trades. So anyway, so first thing I want to do, I want my positive CIV spread. Okay, we talked about this last week. I also want my options to be very cheap, so I'm going to start with CIV mean less than 20. That's going to be difficult to find today with the market falling, implied volatility went up, so not sure when I find too many of those. Then I want my list. I have it here. And then I got $34. All of this is good. Stock filters. So now we're going to be looking at stocks which are strong. Okay. And the stock itself is also strong. Okay. And we're going to look at earnings that are at least 15 days away. And we're going to be looking at auto climate to be confirmed up and sensible on the daily time frame, and ideally to be confirmed up and early on the weekly time frame. Okay, so this is what we're looking for when it comes to scanning. So I'm going to click scan and let's see. That's very demanding, of course, as I was expecting, and we got no results. Before I give up on the technicals, I'm going to explore if options prices could be found. So I'm going to look at options CIV mean minus 45, historic volatility below 2 standard deviation. That's my second choice. We got nothing. And my third choice is options with the top decrease of the CIV mean in the last 5 days. Okay, I remember explaining that last week for shorting opportunities. Now I am doing it for long bullish trades, right? So do we get something? No, we don't. So why is it I've been too demanding? Okay, so let me soften a little bit the request for the mid-term trend there. So if we do that, nothing. What if I forget about the stock rotation itself, because I got the auto climate already taking care of that, so that's fine. So when I do that, still nothing. So what about if I look at here, below 2 standard deviation, still nothing. And if I look at CIV mean minus 20, less than 20, I should say, not minus, we got one, we got PayPal. Okay, so let's take a look at PayPal. Okay, and again, remember, not a worry. Okay, I'm starting from more demanding to less demanding. So in other words, if let's say I got nothing, so then we're gonna look at other settings and then do directional butterflies to neutralize the vega exposure. And then even if options are not too cheap, it's still okay. We can still find a trade which is going to be very reasonable to be taken, okay? But of course, I want to find the cheap trades, right? So which is what I'm looking for. And of course, today with the VIX going up to 18, 19, so there are less stocks that are below the 20 percentile, okay? Maca, I'm looking down because what I'm looking at down here is the price of the options. So I want the price of the options, the implied volatility of the options, to be less than the 20 percentile. In other words, the options I'm going to buy, I want them to be cheap. Okay, so I want a directional bias to be positive. Okay, so the CIV spread is the difference between the implied volatility of the calls and the puts. I want that to be positive. So it's a directional bias to the upside, but I want the overall price of the options to be low because I am going to be a buyer of options to be directional. Okay, so this is positive from the outlook, from the directionality point of view, top positive. The group strong, it's positive from the directionality point of view. The auto climate is positive from the directionality point of view. And this is, let's call it negative if you wish. It's not really negative, it's just low, less than the 20 percentile. And this is not low or negative from the directionality point of view. This is just low, meaning options prices are cheap. That's what it is. Okay? So don't get confused. This is the only metric that has to do with the options price, which is not related to the directional bias of the trade. Okay? Do I have it down? Wow, good catch. Human error, big time. Sorry for that. That's going to change everything. So let's start again. Very, very good catch. Thank you, Tim. So let's do that again. So I'm going to look at below 2 standard deviations. Do we have anything? No. And I'm going to look at less greatest decrease in the last 5 days. No, nothing. Okay, so if I look at the settings the way I have them, I don't get anything which is approvable. Oh, Maca, I misunderstood. Now I get you. Got you. Sorry for that, guys. Okay. To be honest, I was looking at the clock more than the matrix. Okay, which is not advisable because I was trying to rush to get the trade, in time during the session, and I made a human error there, which is of course problematic. So thanks for keeping me, doing the right thing here, guys. So anyway, so what to do when that happens? Okay. Well, no problem. We can go ahead and discard the prices of the options. Okay. And when I discard the price of the options, I would expect, actually, this is very, very weird. Okay, this is very, very weird. It means that all the stocks in the US right now have all the stocks that are in an uptrend and all of this, they have a negative CIV spread, not a positive one, which this is absolutely not common at all. Because now I don't have a condition for how cheap or expensive options are, but notice how I got nothing. So let me go ahead and take a look at, talking about human errors. Guys, I'm very sorry. I was rushing and I forgot to uncheck the strength levels. That, I was thinking this is really, really strange. Okay, so now we got something. Okay, so sorry guys, let me recap. Okay, this is being indeed confusing. So we have long trend for the stock, strong up. Okay, for the stock group up. We got my list. We got nothing in this tab. That was my mistake. Earnings, we exclude anything that report earnings in less than 15 days. So we got time to get to a target at least. And then auto climate, we are looking for stocks which are confirm up on the daily and confirm up early on the weekly. Okay. All of these with a positive CIV spread. And the one thing I had before, which I removed, was we are now looking at cheap options. So let's find out. Yeah, both Disney and Home Depot are cheap options. So let's take a look. What do we have? Okay, so we have 7 out of 9 when it comes to the climate. Okay, 7 out of 9. That's Disney. And if I look at Home Depot, where are we at? Much better, much better. Why? Because it's very close to the moving average, and this is 3 out of 9. The blue line is above the gray line, so we got the CIV spread in our favor. The climate is not exhausted at all on the daily. The climate on the weekly, I mean, no need to do, but I'll do it. It's an early climate, first dot. Okay. So again, everything is just looking good from the climate point of view, and then from a UFO point of view. So if you look at the EMA, the EMA is 327. Okay, 327. So if we look at, we start with the 55, right? So the 55-minute time frame has no UFO at this price. So what if we look at the 89? We're looking at, I said 327, yes. So loading the 89, we got nothing. What about 144? That is 323, it's a bit lower. What about 233? Okay, my internet is slow today, guys. Okay. No UFO. And 377, that's the last one I'm going to use, because then from there is more than a day. So we got 323. Okay, so yeah, I didn't have the UFO I need on the intraday timeframes, but remember that's not a problem, because it's okay for us to use daily timeframes and beyond. So with the daily timeframe, we got 315. With the 2-day timeframe, that's a 2-day timeframe. With the daily timeframe, there is nothing, and with the 3-day timeframe, there is nothing at 327. So unfortunately, we don't have an entry, which I was quite positive. I thought I saw it earlier when switching tabs, that there was a UFO, but I guess it was lower than what I thought it was. So we are looking for 327. Okay, that's what we need. And unfortunately, we don't have it at this moment in time. Okay, so we need to wait for a UFO to form. This could happen anytime. Again, it's something to watch. I mean, if you look at the 55-minute time frame, you got 54% probability. So even those intraday time frames, they are providing good stats. So we just need to wait to see what happens. And again, an hour later, 2 hours later, you may have a UFO there, and that's going to be your entry. If it's located around 328, 327, that's going to be your entry. Okay, but that hasn't happened yet, so we have to wait. So I guess that wait for us will mean that we're gonna try again tomorrow with Home Depot and see if we get the UFO tomorrow and we can plan the trade, because it's indeed very close to the EMA, and it's again the perfect entry point. Trying to emulate or simulate trades like these trades here, this trade here, this trade here, this trade here. So that kind of trade is what we're looking for, and everything is positioning itself perfectly for this to happen. So we're gonna have to review this tomorrow. Okay, Clive, your tab crash. Maybe you wanna send a screenshot or something like that to our support team so they can take a look. Yeah, normally in my experience, the crashes I had with the platform are only happening with the TradeStation version of the platform. Clive, do you have the TradeStation version or the quote stream version? Do you mind to share that with me? Because again, the TradeStation version got a bit more latency, and that sometimes is a struggle. In any case, so I'll wait for your response here, but it would be good if you could have a screenshot and send it to support team. Okay, so that way we can look into it. Anyway, guys, we are about to conclude the session today. So today we did not execute a trade. We spent on TradingView. Yeah, on TradingView there is a known issue that we are trying to fix for a while, and we need to do some kind of major development there, because what happens is that, so I'm loading TradingView here. So what happens many times, okay, is that the UFO, the flying saucers, okay, and this is Forex, but it could be stocks, it doesn't matter. So the flying saucers, okay, that you have on the screen, right? So sometimes they go away and then you have like a red mark with an exclamation mark. Okay. Um, is it possible that this is what's happening to you, Clive? Because if that's the case, it's a known issue that we are working on. Joe, transition was glitchy earlier. Yeah, again, it's all about the data servers. Okay, it's all about the data servers, and I've been using transition for years and years and years, and I've identified certain patterns. Like for example, around a holiday, and we just had one. They tend to do server maintenance, things like that, and then there are problems. Then they have servers in different places in the U.S. In I believe in Chicago and in Texas. I believe that's where their servers are. And so when they have issues, so they may only work with one set of servers instead of all sets of servers, and then everything goes a bit slower for a while, and then that's a problem. Clive, there is a known issue. Okay, so it may be the browser or maybe may not be. In any case, I I am utilizing the desktop application of TradingView now. So this is not a web browser. I don't know if you are aware of this, but you could actually download an application which is TradingView, which is not your browser. Okay, it's TradingView application. So you can just type TradingView download, and I guess you'll find it if you type it on Google. And yeah, I mean it's the same, to be honest, because this is basically an application that looks like an application, but to be honest, is a web browser embedded in an application. But it's kind of like a web browser where you only run TradingView. So it's a bit more isolated from other things you may run on a web browser, and normally TradingView would be a bit more stable. So you may find help doing that. But in any case, there is a known issue that we are working on that has to do with an update that TradingView has done to their programming language, and it's a pain. So, but anyway, we are working on fixing that. Okay, so it is rare, but it happens from time to time. You get that exclamation mark on the screen. Yeah, very nice, cool, fantastic, my friends. Very good to spend this 1 hour with you guys. As always, this is my little special fun time of the week. Today and tomorrow when we get together. So you guys keep up the good work, and feel free to share your comments if you have questions about what we do in trading, the platform, anything really. Feel free to send me emails before the session starts as well. I'm happy to take your questions before, even if, let's say, you're gonna miss the session live and then you're gonna watch the recording. I'm also happy to answer the questions so you can get your answers when you watch the recording. So just communicate, guys. Don't be shy, don't be a stranger, okay? Because we learn through asking and practicing and all of that. So don't be shy, guys. See you tomorrow, everybody. You guys take care. Bye bye, my friends.